Homegrown Bitcoin ETF provides investors with a regulated pathway into the cryptocurrency market.
When you're ready to take your investments to the next level, you might want to consider Monaco.
Hello and welcome to ausbiz on this Friday. You're watching The Global View. I'm Andrew Gagan. Good to have you with us. Let's take a look at what happened globally overnight. Equities slipping while the US dollar and bond yields rose as investors weighed up the size of the next month's expected US interest rate cuts ahead of Fed Chair Jerome Powell's speech tonight. All three major US stock indices fell and were weighed down by big tech shares. Tesla was the worst performer among the Mag 7 and Nvidia also fell heavily. Snowflake shares plummeted despite raising its forecast for full year product revenue. The data cloud analytics firm's margin forecast there remaining unchanged. Zoom Video shares surged after raising its annual revenue forecast, and US listed shares of search engine giant Baidu fell as it reported flat quarterly revenue with a sluggish economy weighing on advertising spending. Advanced Auto Parts tumbled after trimming its annual profit forecast. Peloton shares jumped after posting its first revenue growth in 9 quarters while beating analyst estimates. And US listed shares of BHP and Rio tracked the iron ore price lower. Well, US business activity has fallen to a 4-month low this month while firms struggle to pass on higher prices to consumers. The S&P Global Flash Composite PMI output index there, which tracks manufacturing and services, edged down but remains in expansion in the private sector. Average prices charged for goods and services rose at the slowest rate since January. Meanwhile, the number of Americans filing jobless claims rose in the past week to a seasonally adjusted 232,000, which was in line with forecasts and expected to allay fears that the US labour market is deteriorating rapidly. Federal Reserve policymakers have voiced support of a cut to interest rates as the US labour market cools, with Philadelphia Fed President Patrick Harker saying, "For me, barring any surprise in the data we'll get between now and then, I think we need to start this process." Well, the yield on the US 10-year note rose 8 basis points to 3.85, while the 2-year was almost touching 4%. And the US dollar has rebounded from a 13-month low against the euro, with traders seeing its recent weakness as being overdone relative to its peers. In Britain, the pound initially rose to a new 13-month high against the dollar after British business activity data showed steady growth momentum going into the second half of the year. And the Aussie is at 67.1 US cents. Okay, so let's get across what is moving, particularly stateside. To do that, we are joined by Brad Gastwirth from Unearthing Opportunities. Brad, good to catch up with you again. Let's first take a look at that macro data, what it's telling us about the state of the US economy, I guess particularly with all those numbers I just mentioned there. Jobs, we did get that revision, of course, to those jobs numbers at the same time. How are you reading where the US economy is tracking at the moment?
Yeah, and Andrew, great question. And I think it's on every investor's mind. I mean, that revision lower from the Bureau of Labor Statistics was significant, almost 1 million jobs in the new numbers off the books. And, you know, that's a very big concern. If you look at the Chinese economy, it's certainly slowing down. All eyes are on the United States and what's happening over here. And the reality is that there's, jobs are being cut. You're seeing slower growth, and I think these symbols and data points warrant a rate cut from the Fed, which I think we will see next month.
What did you make of those moves on the equity market then, Brad, snapping the recent positive run there as we head into, of course, that commentary we're going to get from Jerome Powell tomorrow? It appears the market's trying to work out whether a 25 basis point cut or a 50 basis point cut, would the bigger cut signal the economy's in trouble? Would a smaller cut disappoint the market? How are you reading it?
Yeah, Andrew, I mean, a great point, and you're nailing it on the head. I mean, this is exactly what the markets are trying to figure out. Is 50 too much? Is 25 too little? The market is certainly looking for a cut. And I think with this new number, again, that jobs revision lower, 1 million jobs being revised. I mean, that's a significant, and that wasn't 1 million, it was like 808, 800,000 plus that already been revised lower. That's going to cause that rate cut. I think the market's certainly expecting that 25. I think it would be a little bit disappointed with something less. But that being said, if it's 25 and not 50, then I think we're just going to be a little bit status quo. That being said, I'm still bullish overall going into this year. Even with all of these large macro concerns, I still see a lot of tailwinds for the market, and especially the large cap, mega cap, AI related companies. We're still in the early days of those trends, and sounding like a broken record on an alternative investment, continue like precious metals here as well.
So, Brad, let's take a look at some of those stocks now. Nvidia, of course, ahead of its earnings results. What are you seeing from that stock at the moment?
Yeah, I mean, the stocks are being quite volatile right now, right? I mean, we're reaching valuation territories that are uncharted. In terms of how the stocks and companies are executing on the fundamentals, fundamentals look solid. I mean, if you're looking at growth rates, it's hard to find growth rates other than times like in the dot-com, era, and what's happening with AI and what's happening with compute. This is the biggest change to in technology that we've ever seen. So the valuations certainly seem outrageous. That being said, they're pricing in forward numbers that are likely, when you look at street modeling, the street's modeling way too low on these numbers. I think for Nvidia specifically, Andrew, I do think numbers are going to continue to go up. I think that stock is still in the sweet spot. That being said, I think we're approaching like ridiculous territories on valuation. But as I've said many times on this program, valuation alone is never a reason to buy or sell a stock.
Brad, how are you seeing those consumer-facing stocks at the moment? Let's take Starbucks, for instance. What did you make of that, given it has soared?
Yeah, that new CEO news, getting Chipotle's Brian Niccol. I mean, that's a positive. Obviously, the stock reflected that after the announcement. There's likely going to be some strategy changes here, and this is a very well-liked CEO on Wall Street, and that's why we got such a positive reaction to that stock. I think investors were really looking and hoping for that type of caliber CEO. They got it. They were rewarded, and I think that's now all eyes are on execution. But certainly, the investment community liked that choice.
Elsewhere, Nike. Now, of course, its stock has been hammered this year. Are you seeing any turnaround there?
Yeah, I mean, and a great point to bring up here, Andrew, because it's really controversial. I mean, in terms of investors, you're getting some of the like on the advocate front, trying to do some things to the management and board. I think that stock is going to continue to be volatile. I think there's likely an opportunity. The stock's, I think it's down, or maybe it's 30% or something like that for the year. I expect, I expect it's sort of range bound right now, but I do think you're going to see the activists come in, and maybe that's enough to get the stock going again. In terms of am I investing or looking to invest in it? It's not my favorite. I think the turnaround could yield possibly larger return, but I'd rather have money elsewhere.
I see you're also taking a look at Waymo at the moment, just in terms of those self-driving autonomous vehicles, which sort of gone quiet of late. But what's actually happening in that space at the moment?
Yeah, and you know what, Andrew, this is a really good point, because Waymo to me is such an important part of the Alphabet story. I really believe in the future that Waymo is going to be larger than Uber and Lyft combined. And we're just at the infancy of the autonomous vehicles. We're still really not there yet, but it's going to happen, and it's not a matter of if, it's a matter of when. Waymo has the technology, they have the rides. They have the parent behind it, which has tremendous data, especially on maps and roads. I think Waymo will be a force to reckon with, and autonomous vehicles are coming. Again, this is not a pipe dream. This is going to happen. So it's a matter of when, not if, and this will absolutely contribute to the bottom line of Alphabet. The bigger question will become, what happens with these large mega cap companies? Does Alphabet get broken up because they have in the future, the largest transportation ride-sharing company. They also have the largest search and others with content with YouTube. Will Amazon get broken up because of their three segments that each of them are bigger than some countries? The reality is, I do see big tech getting broken up in the future, but I do believe the standalone parts will yield a greater sum than where they are currently. So ultimately, I see that broken up, and I diverged a bit from that Waymo, but I think Waymo is going to be a driving force for Alphabet, and you have to pay attention to that segment.
Are you anticipating that breakup regardless of who wins the White House?
Yes, I do. And I'm not sure if it's a matter of these next 4 years, Andrew. I do think you're going to see more scrutiny, especially as these valuations are in the single digit trillions and growing. But when you look at a company like an Alphabet or an Amazon, each of their business segments that are, they're significant business segments. So let's look at Alphabet. The YouTube segment could certainly be a standalone company. The search and ad can be. Waymo certainly can be, and especially if you look at the future. Now, if I look at Amazon, the AWS, absolutely, their marketplace, absolutely, their logistics business. To your point, that's a great question, Andrew. I don't think it matters with what happens in the next 4 years. Will this happen in the next 4 years? I don't know, but I really anticipate this as something that government will plan to rein back the size and scale of these large caps.
Brad, always great to get your view from Unearthing Opportunities. Thanks for joining us.
Thanks, Andrew.
Let's take a look locally before we get going on the market. We are expecting that recent run of positivity to come to an end today. SPI futures off more than 0.5%. Stay with us because the open is a couple of minutes away.